Welcome back to Cheddar. Focusing on the big fintech story of the day, e-payment company Square announcing yesterday its plan to acquire buy now, pay later platform Afterpay in an all-stock deal totaling $29 billion. Afterpay lets customers pay for a variety of products in 4 interest-free installments and pay a fee if they miss an automated payment. Square is banking on the popularity of pay later platforms among those younger consumers. The deal is expected to close in the first quarter of next year. Joining us now to discuss, Sanjay Sakhrani, senior equity analyst at KBW. Sanjay, welcome to the show. Why is this deal significant?
Well, I think it's a big move for Square to get deeper penetration with their customers. I think the idea that a lot of the tech-enabled players are going for is building consumer ecosystems. And I think what this does is it allows Square to provide other types of services to their customers, including financial products, and this is one type of financial product. Also, what it does for Square is actually get them a foothold into an international market like Australia and Europe and start using that brand to sort of deeper penetrate into those markets.
This is such a growing sector, Sanjay. There's so much competition. Even big banks are getting into the deferred payments game. Does Square's acquisition here give Afterpay a leg up?
Definitely from a scale standpoint, right? Square's got, let's see, is it 70 million Cash App customers? Basically, they can take their product and leverage that across that customer base. So I do think Square's got a developing brand. It's definitely in a part of the population and demographic that the big banks don't serve on a mass basis. And that's a business that can help them grow a relationship as those customers graduate upwards. And I think, you've heard a lot about Square developing relationships with and underbanked millennials. I think that's sort of the key here. If they can grow with that population set, they could become a bigger player in their financial lives.
This is not a new idea. So how do platforms like Afterpay compare to those traditional layaway payments that many of us are used to growing up?
Obviously, the whole journey starts online, right? And a lot more commerce is moving online. So I think that's one dimension in it. There's also, not a lot of friction inside of the actual experience in and of itself. So you apply and basically instantly, in most cases, you get approved, and then it's on you to either be able to get more of that type of product or not. So I think it's just a lot of it's the acquisition tool. And then, over time, the question is going to be if they can take that relationship and tie it to other types of relationships or move that customer and engage them to do more, that's extracting more revenues per that customer. And I think that's the key here, right? Like you can extract a lot more revenues from that same customer that you acquire through this channel. And that's something that wasn't being able to be done before.
I am curious, as we come out of the pandemic, people do have more spending money. What does it mean for the broader economy with this pay later platform, especially as it's starting to dominate the way people are making their purchases, Sanjay?
Yeah, it's a really good question because I'm being asked quite a bit, like, does this encroach on the legacy consumer providers, like consumer credit providers? And I think if you take a step back and you think about this, this is further enabling consumers to do more with their money, right? So I believe that as we're moving up in the economy, hopefully, fingers crossed, I think the consumer is going to lever up more, and this is just going to give them more abilities to add flexibility to their revenue stream. So they can not only lever up using traditional loan sources, but they can also use this as a graduated way of paying for other stuff.
What is your outlook, not only with these pay later platforms, Sanjay, but for the fintech sector as a whole as we move forward?
I think that there's a place for them, clearly. I think it's among people that probably couldn't get credit in the past. I think the US market generally is pretty well served across the financial profile spectrum in terms of credit. But there's definitely a bunch of people that can't get credit today, and this could be used as a source to graduate them upwards. Where I think the bigger play is internationally, right? I think consumer credit availability in other geographies is just not as large. And I think these fintech players, by virtue of their relationships elsewhere, could actually make more informed decisions to provide liquidity to consumers, and then obviously that can help the economy as well.
Sanjay Sakhrani, Senior Equity Analyst at KBW. We really appreciate your insight, Sanjay. Thank you so much.